Ladies and gentlemen, good day and welcome to Aditya Birla Real Estate Limited Q3 FY25 earnings conference call hosted by Nomura. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akash Gupta from Equity Research Nomura. Thank you, and over to you, Mr. Gupta.
Thank you. Good afternoon, everyone. On behalf of Nomura, I welcome you all to the 3Q FY25 earnings conference call of Aditya Birla Real Estate. We have with us from the management, Mr. R.K. Dalmia, Managing Director, Aditya Birla Real Estate, K.T. Jitendran, MD and CEO, and Mr. Snehal Shah, CFO. Sir, we will start with the call with opening remarks from the management, which will be followed by a Q&A. Over to you, sir.
Okay, thank you. Good afternoon, everyone, and welcome to the earnings conference call for the third quarter and 9 months of financial year 2025. Let me now take you all through the financial highlights, followed by the business-wise operational highlights. For the third quarter of financial year 2025, the consolidated turnover of continuing operation declined by 4% year-on-year to rupees 946 crore. 946 crore EBITDA for the quarter was reported at 18 crores, with EBITDA margin reported at 1.9%, while the net loss for the quarter was 37 crores. For 9 months of financial year 2025, the consolidated turnover of continuing operation grew by 18% year-on-year to rupees 3,206 crores. EBITDA for this period was rupees 241 crores, with EBITDA margin reported at 7.5%. The net profit of continued operation for this period was rupees 3 crores. Now let me take you through some of the key highlights across our business verticals, starting with the real estate business. During the quarter, the Indian real estate sector recorded strong sales with consistently growing appetite for new launches. The premium and luxury residential housing segment continued to outperform, driven by factors such as a large space requirement, advanced amenities, and a desire to secure and well-designed living spaces. Premiumization continued to remain the defining feature in the residential segment. Q3 25, the real estate business performed very well, with booking value increasing by 257% year-on-year to rupees 675 crores at our already launched projects, and collection increased by 175% year-on-year to rupees 501 crores. The revenue of Birla Estate grew by 117% year-on-year to rupees 184 crores, driven by continued deliveries at projects Birla Alokya in Bengaluru, Birla Vanya in Kalyan, and Birla Vanya Navya Phase 1 in Gurugram. Adhering to our commitment of diversifying the portfolio while catering to demand for spacious homes, we acquired a 70-acre land parcel in Boisar for our first-ever plotted development project. In other updates, Birla Aurora has been awarded the prestigious Net Zero Energy Existing Building certification by the Indian Green Building Council. Also, Birla Anayu Vatkeshwar has received LEED Gold pre-certification, reaffirming our commitment to energy efficiency and global sustainability. Let me also take this opportunity to provide some clarity regarding Honorable Supreme Court order on land bearing CS 1546 that appeared in media publication of Times of India. The Worli West land comprises of freehold and leased land. The leased land, which is under Supreme Court order measuring to 25,544 square meters or equivalent to 6.31 acres,
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Akash Gupta from Nomura. Please go ahead.
Hi, sir. We'll take the first question till the question queue assembles. So, sir, we did not have any launches in the third quarter in the festive season, and now we are saying that we'll have roughly 6 launches in the fourth quarter. So, I just wanted to understand, where are we with respect to RERA timelines for these 6 projects, and how confident are we that all these 6 projects will go through? My second question is with respect to the loss in your real estate segment this quarter on the P&L. I just wanted to understand, could you give us a brief background as to why do we have a loss in the third quarter for the Resi segment? Thank you so much.
Okay. Hi, Akash. Good morning. So our launch calendar for this quarter, largely based on our RERA clearances, is we are expecting the Birla Trimaya and Birla in Sangamwadi, which is in Pune. We are expecting these 2 launches in February. Also, we are expecting to launch Sector 31 in Gurgaon Barmont project in February. And we're expecting 2 launches in March. One is in Sarjapur, Bangalore, and the other one is the new phase of Navya in Gurugram. So together we expect to launch about 8,000 crores of new projects worth of inventory. So with that is our confidence that we'll be able to achieve our guidance.
So Akash, on the loss part of real estate, basically the reason is, of course, our corporate overheads are going up, and we were expected to realize some EBITDA from the handover of our completed properties in Kalyan particularly. So that has not happened in this quarter, so we could not recognize that revenue as well as the profits from that, which will probably happen in this quarter.
I see.
So,
thank you.
Akash, I just want to assure you all our margins for these projects are all protected. We are running a margin of at least 25 to 32% in all the projects which we are handing over, and overall it's close to about 30 to 35% margin. But just because the revenue number has not come in while our overheads is evenly distributed across this thing, we have this blemish is there in the.
Mm-hmm. Okay. Got it, sir. And sir, one more question for FY26. What is our pre-sales guidance? How are we looking at that?
So we'll refrain from giving any guidance at this point of time. Let's see about the quarter 4 performance.
Akash, essentially, as Katie mentioned, that we have this few launches in this quarter. We have to see what is the performance of those launches, and based on that, we have to consider the sustenance sales of the balance, including our existing launched properties. And based on that, we will work on the number, and probably end of quarter 4, we will be able to give you a better guidance.
Understood, sir. Thank you.
Thank you. Next question comes from the line of Dixit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. So my questions are related to this recent Supreme Court order. So some of the thing you have already covered in the opening speech, but a few doubts regarding that. So firstly, is it only the litigation is only in the west part, or is there any litigation on the east part of the land as well? Secondly, this west part is a 10-acre. So entire 10-acre is under litigation, and only the judgment has come for 6-acre, and or only 6-acre was under litigation and 4-acre is absolutely clear. The next part is whether we will have to develop any unit for the BMC, and if yes, then how much it will cost us. I have few more. If you want, I can cover entire thing.
Yeah. Hi, Dixit. So just to give a little more clarification on the, on this litigation aspect, which was already covered by Mr. Dagnaji in the opening statement. So the litigation is clearly restricted to that 10 acres of land on the litigation is restricted only to the Worli West land, not to the East land. East land is totally clear and there's nothing to do with it. On the West land, which is approximately 10 acres, 3.5 acres was freehold, where there is no problem. It's absolutely clear. If you remember, a few years back, we had said that we have won in the High Court, etc., on this 6.5 acre land, which was a long lease land from BMC. So that is where the order got reversed in the Supreme Court. So the thing remains that only the 6.5 acres is where we have suffered a loss in this litigation. Otherwise, the rest remains intact. Also, it's pertinent to mention that there is a lot of obligation in terms of building the workers' colony there, etc. So if the land goes, obviously the responsibility and the liability of redevelopment, etc. also moves to the owner of the land.
Okay, so in case this land goes, so we will not have to build anything.
Right, you are absolutely right.
Okay, and is there any space where we can appeal against this order, or it's full and final done?
So these legal options we are exploring at this point of time.
Okay, and just regarding this, if we surrender this land, whether we will be getting any additional FSI, TDR or anything, and is there any option where we can give them this land somewhere else and keep this land?
We can't surrender. It is it is their land.
Yeah, it's
this 6 acres. You clearly understand. Worli East is 30 acres now because we also acquired the Wadia land. So that is completely a separate story. There are no issues on that. This is a 10-acre property of which partly 4 acres roughly is our own leasehold land. So there is no litigation or any encumbrance or anything on that land. So that is free for us to develop. And we maintain that we will develop that. The issue is only on the 6 acres land. 6-acre land belongs to BMC. So BMC had leased it to us. And we wanted to take possession of that, which the Supreme Court has said now you can't get it. So therefore now everything related to that is with BMC. So we don't have to surrender because it is not our land that we have to surrender. It is their land now at the moment.
Okay.
I hope you are clear about that. So anything they have to do on that land is their liability. We have absolutely no liability on that land.
Okay, understood. And my second question is regarding the Niara project. So how much units are unsold in the first tower and the second tower?
Yeah. So we've sold how much? 1 second.
414 units.
Yeah. So in first tower, about 400 units are sold out of 414. Second tower, about 86 units are sold.
Okay.
Out of 148.
Okay. And any thoughts on Tower 3 or?
Yeah, that we are planning to bring it in this coming year.
FY26?
Yeah.
Okay. Okay. That's it from my side. Thank you.
Thank you.
Thank you. Next question comes to the line of Siddhant Chapra with Minerva Asset Advisors. Please go ahead.
Yeah, hello. Good afternoon, everyone. Just had a couple of questions on the paper and pulp segment. Firstly, if possible, can you give me the split of wood procurement between Subabul, Casuarina, and Eucalyptus, the 3 types of wood?
Siddhant, I don't have that breakup at the moment, so we can offline. You can drop an email. I'll send it to you.
Okay. So, and when I drop the email offline, could you also tell me how it's changed over the last year? That's also possible.
Okay, I'll try to send you this trend or whatever.
Right.
You want to know Eucalyptus and Poplar, right? The breakup.
No, so Subabul, Casuarina, and Eucalyptus, what the split is of wood procurement between these 3?
Okay, fine.
Okay. So my second question now is regarding wood prices. If you can give me an idea that how do you see domestic and imported wood prices moving over the current year, calendar year 25, over the rest of the year?
I think the cost pressures will continue. The wood prices have gone up by close to around 6.5% from last year, and imported pulp has gone up close to almost 70-odd% up. So that pressure will continue, particularly imported pulp, because of the dollar, rupee depreciation also would impact the pricing of that. So that is one thing, and there is the demand supply part. Probably it will also continue because there are new capacities that have come up in the market and all that. So those cost pressures will certainly continue in the near future. But then there is a possibility that slowly as the demand picks up, we can pass on some of it in the pricing.
So are you saying that the domestic wood prices, you expect them to stay stable or increase, or?
Mostly we expect them to be at least sustained, but we don't expect it to considerably go down.
Okay, so domestic wood prices, you don't expect a decline over the rest of this year, say by December, end of the year. Okay, right. And on imported wood, you told me imported pulp. What about imported wood?
We don't import wood.
Okay, right. Okay, then my last question would be on Shandong Chenming, the Chinese paper company. They had a significant part of their capacity shut down in this last December quarter. So first thing would be, have you heard any update on that, if it's come back or to any extent? And secondly, because of that, have you seen that the competitive intensity in paperboard has come down due to their capacities being shut off in the last quarter, because they are quite a large player in the paperboard segment?
So I absolutely don't have any update on that part, but you have to understand that we were facing pressures both from imports as well as from new capacities coming up in the market. So imports probably we are slowing down. That is what we are seeing. But the pressure is still up because of the new capacities in the domestic market.
Okay, so you're saying that in paperboard, import pressure has been slowing down?
Yes.
Okay, and do you expect that to remain the trend going forward, or do you expect the competitiveness to increase again?
So, I think it would probably always be there, and now with particularly rupee depreciating also would probably slow it down a bit, in my opinion. So, the pressure may be there, but it won't be as intense as it was in this financial year.
Okay, so again, like the decline has happened and you expect it to be slow, the pressure from imported paperboard to be slow as well, not pick up again.
Yeah.
Right. So, okay, I'll reach out to you regarding the split between the three types of wood procurement. That's all from my side. Thank you.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Harsh Pathak with MK Global. Please go ahead.
Hi, good afternoon, and thanks for the opportunity. KT, with regards to your remarks that, in fourth quarter we'll be launching 8,000 crores of new inventory, but, to meet our original guidance of 7,000 to 8,000 crore of pre-sales for the year, I think the ask rate is, close to around 5,000 to 5,500 crores. So, how confident are we that we'll be able to achieve, this high sales from, whatever year we are launching in the last quarter?
Hi, Harsh. So apart from the launches, there are also sustenance sales. So with a combination of both, we are pretty reasonably confident that we will be able to achieve this promised target.
Sure. So that 7,000 to 8,000 crores remains intact, guidance remains.
Yeah. With the help of new launches and sustenance both.
Sure. But, in the sustenance launch, I was looking at the Q3 performance. So I think the third quarter was mainly driven by Niara sales. I think 55% came from Birla Niara, phase 1, phase 2 combined. But, now again, Walkeshwar, we have, not seen any sales during the quarter. So first is, how is the traction, in the luxury and premium segment, and, the sustenance inventory is also low. So now my question was more around that.
Yeah. So I'm not expecting huge this thing because we don't have much of sustenance except whatever is the leftover inventory from Silas and Walkeshwar, which is Birla Anayu. But I can be confident saying that we are getting a lot of traction in both these projects. A lot of interest is being shown. People are coming, going. But as we know, in these luxury sales, once the launch is done, it takes its own time for deals to be concluded. And usually, most times you have noticed that Q4 is a high action period for these very high-end value units. Luxury sales, about 10 crores is usually seen pretty strong traction in that final quarter.
Right. But are we seeing the footfalls, good footfalls still at our projects at the luxury side?
Yes. Pretty strong.
Sure. Yeah. Sure. And my next question was regarding this Boisar land parcel. So, what kind of development are we eyeing there, and when do we expect the launch of this particular project?
Yeah. So it should be a pretty quick launch. It's a plotted development that we are planning there. So we are, and it's very well located, very close to there's a bullet train station which is coming up from Ahmedabad, Mumbai. The location is very strategic. We got a very good deal. So it's largely a plotted development. So I expect this to be launched in the next financial year.
Okay, so in the first half we can expect this launch?
Yeah, I don't like to guide so sharply, but I can at this point of time confidently say that should be in the next financial year.
Sure. And what would be the GDV of this particular project?
Roughly about 500 crores, being a plotted development.
The entire project, and this is completely our share, right? Yeah, I think it's an outright purchase. So.
Right.
Sure. And regarding the BD pipeline, I think in this year we have already done a very good business development. So how does the pipeline look for the future acquisitions?
Yeah, so we have already done about 23,000 crores. So pipeline looks pretty robust. Still very strong deals, both JDA and outright, we are pursuing at this point of time.
Sure, great. I think those were my questions, and all the best.
Thank you.
Thank you. Next question comes from the line of Pritesh Seth with Axis Capital. Please go ahead.
Thanks for the opportunity. Just one question, or actually a couple of them. One first is on Sarjapur, since it's a big project. We would get approvals for the whole project, and we would launch, one or two phase out of it, or what's the plan there?
Yeah, considering the market demand and the land structure, etc., we are actually planning for a single phase launch.
Okay, so whole of project will get launched at one go. Okay, that's good to hear. And secondly, on the debt part, 4,000 crore, which is like close to 1:1 in terms of equity. How are we looking ahead in terms of managing the leverage? Is there some comfortable ratio that we have in mind? And or from the trajectory perspective, is this going to go down from here on? And if yes, then how are you planning to bring this leverage down? I know, we have a good pipeline, expecting a good cash flows from it, but it will take probably a couple of years for us to scale up to that cash flows. But in between, how are we going to manage it and keeping the growth also in mind? Yeah, so I'll just repeat my question if you got disconnected.
In the interest of time, we don't need to repeat it. So yes, the comfortable level for us would be somewhere around 1.1 of the equity, and I know we are very close to it. But then the thing you have to understand, we have these launches, so a lot of cash is expected to come. Roughly, even if you take 20% of what we are going to launch, that would be about 1,000 odd crores at least that will come. That will help in reducing the net debt to us. The cash may not be available, but it will reduce the net debt. Therefore, we can access additional borrowing against that. Plus, if you look at the launches that we have already done and the amount of bookings that we've done, and you net off the balance expenditure and the balance cash that we have to receive from our launch project, we are much more comfortable. Roughly around 5,000 crores of cash is in the bank right now to be received in the next 2-3 years based on that. Is it clear, or you want some more clarification? Hello? We got disconnected again. Hello?
No.
Said?
Yeah, I'm there. I was on mute. Sorry. So just, I got that answer. Just one more follow-up there. In terms of land investments, do we have some target in terms of how much we are going to invest to acquire projects? Considering we have already built a reasonable pipeline. So what's the target there for next year?
So as you said, we have exceeded our this year's target by more than 25%. So, but we, as we mentioned in the past, also we keep looking for good value-adding projects at good locations, which will further enhance our brand and we'll be able to do justice to the business. So, whenever we get such opportunities, we are at this point of time chasing quite a few with no particular timelines. So whatever we get, if it's a good deal within our parameters, within our broad guidelines, we will be happy to acquire it.
Fair enough. That's it from my side, and all the best.
Thank you.
Thank you. Next question comes from the line of Saksham with Ambit Capital. Please go ahead.
Good afternoon, everyone. Thank you for the opportunity. My first question is related to the presentation. For the MMR region, slide 17, for the MMR region, saleable area increased by 0.5 million square feet compared to the previous presentation, while the GDV decreased approximately by 5,000 crores. So can you please explain the disconnect over here?
Yeah. So we have just kind of kept the litigation part, whatever, that we kept it aside.
But if you would observe that your saleable area has increased by 0.5 million square feet. So it is now 10.6. It was earlier 10.1. The previous presentation.
MMR. I'll just check that and come back to you. 10 points.
Sure.
Yeah.
Sure. And my next question is related to the Noida update. So we haven't got any update on the Noida currently. Any potential timeline or the GDP potential of that project, if you could highlight that as well.
Yeah. So Noida is still work in progress. There is, as I mentioned last time, there are a few conditions precedents which still is being handled by the land JV partner, the landowner. So unless that is complied with, we are in no position to declare or talk about it.
So no timelines on that as of now.
Yeah, difficult to guess, wager a guess there. We'll be able to tell you once we do it.
Sure. And my last question is related to the Worli land. So what about the potential launches for FY26? As you mentioned that you will be launching for Niara for phase 3. What about the Wadia family land that we have bought and the Century Bhavan, if you could highlight that as well?
Yeah, it's too early to kind of give a guidance at this point of time. We are right now focusing on our launches for current quarter. Once we kind of make progress on this, we'll be maybe in a better position to assess the situation. For sure, we are pretty confident of launching Tower C, the third tower. As far as the rest of the parcel is concerned, that we are in the process of market assessment, etc. So difficult to wager a guess now.
Understood. Okay, that's all from my end. Thank you.
Thank you.
Thank you. Next question comes from the line of Siddhant Chabra with Minerva Asset Advisors. Please go ahead.
So I just wanted a re-clarification on the paperboard part I asked, because in the IP, it says that the Q4 outlook, both volume and pricing remain subdued in the board segment due to competitive intensity from low-cost imports. But when I had asked the question earlier, we had discussed that pressures from import is slowing down. So I just wanted a clarification. Am I misunderstanding something?
We are not saying that the pressure is off. I have just mentioned that the intensity might kind of reduce because you've seen some, particularly we've seen some good, I won't say good, on the rupee dollar side. So that makes imports bit competitive. That's all I'm trying to say.
Okay, that's all you. Okay, just one. And you had mentioned about domestic capacity also coming on within board. So could you?
It's come up in board. It's come in tissue also.
Okay. Can you? Is it possible to disclose some names of the players where it's come up?
I think in our presentation on the tissue we have already discussed. And in terms of board, they are all big players like ITC, JK, etc.
Okay. Right. Okay. Thank you.
Thank you. Next question comes from the line of Chetan Shivami with Accenture. Please go ahead.
Hello. Good afternoon, sir. I had a question that what kind of revenue split do you think between pulp and paper and real estate segment going forward? I understand that you are cautious about the performance of the upcoming launches in Q4, but still, I would like to know what kind of split do you think going forward? Because we are seeing consistent decline in pulp paper segment because of economic headwinds also, but we have also seen aggressive increase in the real estate segment in terms of revenue. So how do you expect the split? That's my first question.
So yes, our focus is, in terms of revenue growth is going to be in the real estate sector because we have no plans to add any capacities in our pulp and paper business. So gradually you will see the turnover in amount increasing in favor of the real estate business. And the pulp and paper business may just, marginally improve its turnover, which would depend slightly on the volumes that we have planned in terms of better capacity utilization and in case the NSR of the products improve.
Noted, sir. My second question is, you would have expected some kind of EBITDA margin for the new launches or for the real estate segment for just quarter 4. So I understand that there is a lot of uncertainty about how the projects will perform, but still, can you give guidance about what do you expect a rough EBITDA margin for the Q4?
So largely it's between 25 to 35% of margins.
All right, sir. That's it from my side. Thank you so much.
And also I wanted to give a clarification because the question raised by Saksham from Ambit Capital that how is the MMR GDV increased from 10.1 million to 10.5 million. It's largely, there has been a reduction in the overall Worli portfolio because of this Worli West land where the litigation results have come. But there has been an increase because of Boisar land acquisition, which is in the tune of about 1.4 million square feet. So netted off, it comes from 10.1 to 10.5 million square feet. Just wanted to give that clarification. Thank you.
Mr. Shivami, are you done with the questions?
Yes, I'm done with the questions.
Thank you. Next question comes from the line of Amit Srivastava with B&K Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. My first question is hi, sir. So my first question is in terms of what is the plan for the construction cost, Birla said this year, FY25 and next year, FY26? And what is the collection we are looking at in this overall building?
So, hi Amit. So collections, of course, we have collected, 1,600 plus crores last quarter, which is already higher than what we collected the whole of last year. And through all these launches and further handovers, etc., we are reasonably confident of adding up another 1,000 to 1,200 crores in that range. So, and we are having a good, net cash flow from these operating projects for almost plus 500 crores. So construction is not a challenge. So we're already running at a positive cash flow from our operating projects at 500 plus crores.
So any ballpark number, sir, on a construction cost?
Construction cost moves from project to project depending on percentage.
Overall, total for the FY25, sir.
But yeah, we can come back to you on that number.
Sure.
Yeah, around 1,800 crores is our construction spend going to be this year, roughly.
Okay. And in terms of the project pipeline, we have given 5-6 projects which is going to launch. If you can give out the breakup in terms of the GDV, because the Thane project is large, but what is the kind of value we are launching in first phase? In terms of Sangamwadi, what is the value we are going to launch?
So, Sangamwadi, we are launching in the range of about 400 crores.
How much, sir?
400 crores Sangamwadi, phase 1.
Okay.
Trimaya, we are launching the new phase of about 800 crores. Sarjapur, we are aiming for a launch of almost 3,000 crores. Birla Navya, about 1,000 crores. Barmalt in Gurgaon, about 3,000 crores.
And in terms of the Birla Niara, have we seen any kind of price increase over the last 1 quarter, sir, particularly in Silas?
Sorry, what is that, Amit?
So in the second phase, in a Birla Niara, have we seen a price increase?
Price increase? No.
Yeah.
We haven't done anything. No.
Okay. And in terms of, sir, balance sheet, you have already clarified, but just wanted to understand that these cash flow which we are looking at, the collection will be seen in terms of the project, but that cannot be utilized for the getting a newer project on a BD. So looking at the current balance sheet, it looks like that next year getting a new pipeline adding is becoming a challenge from the balance sheet perspective.
So, Amit, what I meant was, this money which comes gets into our RERA account. Okay?
Right.
So, but that account, that balance that I have ends up reducing my net debt. So,
Okay.
I have therefore more leverage to borrow against that.
Okay.
If you understand what I'm saying.
Yeah. So basically a standalone business will keep on raising the fund.
Exactly, yes.
And any thought process on a paper business, sir? Because we are working since last 3-4 years to improve on our operational efficiency, but we are not getting any result, though the market conditions are also not very conducive. But what is the long-term plan? So are we planning to continue this business, or we have a plan to do something to release the funds from there to push?
At the moment, I will not comment on the second part. In terms, of course, this year has been not so good for the entire industry, if you know very well. And we certainly faced that situation more. And our capex that is happening is continuing to happen. But then if the cash flows are not in because of the business situation, then we can't, we postpone our capex also, and that impacts our this about increasing our capacity and reducing our costs. So, but we are pretty hopeful that till the time we continue this business, going forward, it will start producing the required cash flows, and at the moment, of course, the business will continue.
Okay. So last question is that when are we going to develop the Century Bazaar and adding it into our GDP? Any thought process?
So, Amit, on Century Bazaar, we have some plans, but with the acquisition of this additional land, we are rethinking on the entire strategy. Because we have enough of supply in this micro market. We need to strategize and plan this properly. So that's work in progress.
So it will be Desi plus commercial, how it will be the mix? Any?
Both options are open. We are largely
Okay.
inclined at this point towards resi, but both options are open. Now we have enough of, inventory, so
Right.
we're exploring, yeah.
Okay, sir. Thank you very much, sir.
Thank you.
Thank you, Amit.
Thank you. Next question comes from the line of Dikshit Doshi with Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity again. So, Birla, Vanya, Alokya, and Navya are under the delivery phase. So how much revenue recognition would be pending still?
So largely, I think, Navya and Alokya is done. It's 100% done, except some customer receipts. People are, taking their time to take possession, etc. As far as Vanya is concerned, we have done about half of it, and the rest half of will be partly for this year. Yeah.
Okay, so around 400-450 crore of revenue.
Yeah, roughly that is the number.
Yeah.
And it will happen in Q4 only, or some will?
Bulk of it will happen in Q4. There will be some spillover to the next year.
Okay.
Yeah.
Fine. That's it.
Thank you. Next question comes from the line of Raj with Arjav Partners. Please go ahead.
Hello.
Hi, Raj.
Hi, am I audible?
Yeah, you are.
So, out of the 14,980 crores of the ongoing project, what will be the timeline for completion?
Timelines will range, it may go all the way up till 2029.
Okay. All right.
We'll keep adding projects as phases, we'll keep extending.
All right. And how much?
We're going to launch new phases this year, so that will run for another 4.5 years from here.
That's true. And sir, how much would be the EBITDA on this ongoing part?
Ongoing, it roughly take 30 to 35%.
30-35% EBITDA? All right.
Yeah.
And so then on the upcoming part, which is around 48,000.
Sorry, 48. Yeah, I think at this point of time, we should assume similar EBITDA. That's what we are doing. But largely, as I've always tried to guide the analysts, is that, we look for IRRs. We are focused on IRRs. So we'll keep selling inventory and, convert inventory into cash and move into new projects. So that is constantly our model, being very capital efficient and also trying to convert inventory into cash and keep turning over cash, because in a business which is essentially cyclical, I think it's very important to focus on return on equity, return on capital employed, rather than on purely on EBITDA. So EBITDA may guide you to keep on sitting on inventory to achieve your targeted margins. So we are more about cash turnover. Is that helpful, Raj? Hello?
He might be muted.
We have lost the line of Mr. Raj.
Oh.
Next question comes from the line of Hardik Jain with ISJ Securities. Please go ahead.
Thank you. I think most of my questions are answered. Just two things. Any thoughts on Prabhadevi? I think last time, once it was asked, I think it was answered that it is in distant future.
Not at the moment, Hardik.
Sorry? Not at the moment.
At the moment, yeah.
Okay. And is there a chance, or are we thinking on redeveloping Century Bhavan that we have?
So that will come before Prabhadevi.
Okay. So how big is that portion, Century Bhavan?
So Century Bhavan is situated in a plot of about an acre, roughly, and has a potential of about roughly 4 lakh square feet. We also have to be careful how to schedule our the entire launch phases of Worli. With Worli, we have plenty of inventory, positioning, planning, pricing. All of that is required. So accordingly, we will we are that plan is work in progress at this point of time.
Okay, great. Thank you.
Thank you. Next question comes from the line of Isha Shah with Nizar Enterprise. Please go ahead.
Good afternoon, sir.
Good afternoon.
So my first question is, last year in last Concall, we had mentioned that for project Mathura Road, Delhi, there were few approvals that were pending. So I would like to know what's the status on that, and are we planning to launch that, or what's the status over there? The second question is related to the pulp and paper business. So what would be the NSR and operating cost per ton as compared to our competitors?
Hi, Isha. So on the India Hume Pipes, the project in Delhi, there has not been much progress on the approvals. We are expecting after the elections, things will improve. There will be more, responsible people taking charge. At this time, the committee is not in place, etc. So there's not going to be launched this year. If at all, it will happen only in the next financial year. We haven't made much progress there as of now. We're waiting for the new establishment to come in post-elections and then take charge.
On the pulp and paper business question, I would not like to comment on the NSR comparison because it's not just one single product. There are different kinds of products, and within those products segment also there are different varieties of products. So there will be some places where our NSR is better than the competitors, or maybe equal, or maybe low. What is important is on the cost factor, roughly on an overall aggregate basis, usually we have a little bit of a cost disadvantage of close to about 5 to 6% vis-a-vis our premier competitors.
Okay, sir. Thank you. Thank you so much, sir.
Thank you. Next question comes from the line of Siddhant Dand with Goodwill. Please go ahead.
Yeah, hi. You said you had a 4 to 5% cost disadvantage to your competitors. So any reason why?
See, there are a couple of reasons. One is some competitors have certain subsidies available. They have, we have slightly older plants, etc. And we have a locational disadvantage also. We can't, if you want to go out of north, it becomes a little challenging for us in terms of logistics. And there are few competitors with higher capacity could afford to put some captive plants for processing mechanical pulp, which for us it doesn't make sense, so we have to import them. So based on the pricing of the imported pulp, sometimes it becomes our disadvantage. So there are a variety of reasons, but broadly we have estimated that we kind of more or less at any given time would range between 5 to 6% of the competitor's cost. So our EBITDA margins are not would be if they are 20%. Competitors, I'm just talking about the major competitors. They would be probably about 25-26%.
Okay, my second question was on the anti-dumping duty. So are we working with the government?
We are constantly the paper body, IFMA, which is there, is constantly in dialogue with the ministry, etc., to ensure that. But the case is not very strong as we feel. From what we understand.
Okay, perfect. Thank you.
Thank you. Next question comes to the line of Akshay Ajmera with Nizar Securities LLP. Please go ahead.
Hello.
Yeah, Akshay.
Yes, thank you so much, sir, for the opportunity. Just a quick question on the Worli Westland litigation. You mentioned that how much GDV is revised downward because of adverse Supreme Court ruling?
5,000 crores. Roughly 5,000 crores.
5,000 crores. And in area, it would be how much, sir?
6.5 acres. 6.3 acres.
Developed
square foot.
Square feet area. Developed area. Square feet area.
For lease Ulan, 6.83 lakhs.
Yeah, about 6.8 lakhs
6.8.
of FSI potential.
Okay.
But we must also remember that along with this, there is a lot of rehabilitation liabilities also. So the margins of this will be much lower than the usual margins.
Okay. And
it is expected 4 to 5 years down the line. So the NAV will not be significant here, the NPV of these.
so there are no thoughts of procuring this land from BMC going forward?
So we are exploring all options. Too early to come to a conclusion.
Right. Got it. Thank you so much for your answer.
Thank you. Next question comes from the line of Prashant Gaikwad, an individual investor. Please go ahead.
Hello. Good afternoon, sir. I would just like to ask you one question with respect to the Century Bhavan. So what would be the revenue potential for that plant?
Which one? Century Bhavan?
Century Bhavan.
Bhavan is roughly about 4,000 crores.
4,000 crores. Okay, got it. Thank you very much, sir.
Thank you. Next question comes from the line of Himanshu Javeri, an individual investor. Please go ahead.
Yeah, hi. What launches are we expecting in this quarter, and do we expect around 3,000 to 4,000 crores of pre-sales this quarter to meet our guidance for the full year?
Hi, Himanshu. I have already explained the entire launch calendar, month-wise, project-wise, area-wise, value-wise. So, and right at the beginning, and also we are reasonably confident of achieving our guidance.
Okay. And can we share, are we seeing some slowdown in prices, as in the end, the real estate is connected to the stock market, and their prices are down 30-40%. So just to know for the knowledge.
So Himanshu, what we are seeing, that we are coming up for launches also, is that the inventory overhang continues to be very low, far lower than what it used to be in the past when the markets were not so great. Demand has been strong. Overall, if you look at year to year, there has been higher intake of compared to last year. The sales have been much higher than what it has been last year. So it's too early to predict that there is going to be a slowdown or any of that. So there has been no letdown in pricing. We had a launch in Q2 in Bangalore, and what we sold for phase 1 of Trimaya last year at 6,200 got sold at 8,200. 6,800 what we sold last year got sold out at 8,200 last quarter, and again a full sellout. So that is what the data tells you.
Okay, so as of now, we are not seeing any kind of slowdown.
Not to my knowledge.
Okay. Thank you.
Thank you. Next question comes from the line of Siddhant Chabra with Minerva Asset Advisors. Please go ahead.
Yeah. Hi. So you mentioned in your investor presentation that the writing and printing segment has witnessed soft demand in Q3. So within that segment, specifically copier paper, if you can give me an idea how the pricing has been over the last 2 quarters, so sequentially, and how import intensity has been. You said it's increased, and how do you expect import intensity to be going forward within copier paper only?
Right now I don't have the numbers, so could you?
Yeah. Hello.
Yeah. So I was telling you, you few questions. So why don't you just? I don't have all the numbers with me right now. So just drop an email. I'll answer your questions.
Okay. I'll drop all the questions.
Yeah.
Right.
Thank you. Next question comes from the line of Raj from Arja Partners. Please go ahead.
Hello.
Hi, Raj.
Am I audible now?
Yes, you are.
Hello, sir. On the upcoming launches part, which is around 48,000 crores, right?
Upcoming launches of the future, in the long future. Yeah. As of now, it's 48 because 14 we have launched, which will happen over the next 5 to 6 years.
It will launch over the next 5 to 6 years, all right. And how much is our share from this whole amount?
See, on the most of it is apart from 4 or 5, I think there are only 2 revenue shares. The rest is
out of 63, about 57 is ours.
Roughly 90% this is ours.
57.
Understood.
Yeah.
And how much would be the EBITDA on this upcoming project?
Yeah, so for projects like Worli, which is about 50%, our EBITDA is expected to the margin about 45%. And the others we have acquired and the JDAs, etc., range from about 25 to 35%.
All right. And how much would be the overall cost in constructing all the 63,000 crores of portfolio?
So we take out the margin and that's what it is. Minus land costs is up.
So land cost really,
Yeah.
So in this, go on.
So if you look at 63,000 crores and we say that the EBITDA margin is 35%, rest is all cost, right?
बराबर.
हाँ तो वही cost हो गया, आप calculate कर लीजिए.
I think it comes to around 10% PAT. Am I right?
10%.
After removing the tax part.
Anyway, so this detailed accounting, this thing we can discuss outside. Our EBITDA margins is, as I told you, in the range of about 25 to 35%. Projects like Worli and lands around, which is about 45%.
Okay.
That's the broad guidance. The rest of the calculations you can figure out, or we can talk about it offline.
Offline. All right. I'll just drop in an email to your IR team. You are right?
Yeah.
Sure. Most welcome.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Aditya Birla Real Estate Limited Management for closing comments.
Thank you all for participating in this earnings call. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Algorithm Advisor. Thank you so much for all your participation and interest in our company. Thank you so much.
Thank you. On behalf of Aditya Birla Real Estate Limited Management and Nomura, that concludes this conference. Thank you for joining us. You may now disconnect your lines.